Notice I did not say go buy it right now.
Thanks for joining me on the Comstock channel this morning. I'm analyst Brian Grete, and I have a very special guest today, Josh Linville with StoneX. He is their fertilizer expert, guru, whatever you want to moniker you want to put on it. But when it comes to fertilizer, this man knows a lot in the industry and is widely regarded, and just so happy to have him join me today to talk about the fertilizer situation. Obviously, margins are squeezed right now. We're coming into harvest time frame. That means that fall applications are going to be just around the corner, and we really need to think about those things. Josh, thank you so much for joining me this morning, and great to have you as a guest here on the Comstock channel. Talk a little bit about those high fertilizer prices. I know that you're pretty active on X or Twitter, and you've been mentioning recently about how these prices are so high and squeezing the farmer. And give us a little bit more insight in terms of why the prices are high and what you see as we move forward, not only through fall, but then into the winter and maybe even out into the spring time frame.
It's kind of one of those love-hate relationship type things. It's like, man, this has gotten really popular. Things have blown up. That's fantastic. And then you sit there and you think about the what and the why. It's a little bit depressing. It's on the back of basically farmers, not only here in the U.S., but around the world, who are really suffering because they're dealing with a situation with high input prices and really low grain prices. And that's what, at the crux of this thing, that's what really hurts. It's not the high price of fertilizer that's killing us by itself. It's the combination of the fact that we've got really high fertilizer prices, and there's nothing great about the grain values out there, right? We got a massive crop coming off. That's putting a lot of pressure, downward pressure on the pricing. It'd be great to have some upward pricing or pressure, but all this to sit there and say it's the combination between the two that is really squeezing the farmer out there. They just simply are not making enough outputs to offset the inputs. And what people sometimes fail to realize, we're part of this world market on the fertilizer side, whether we'd like to admit it or not. And a lot of the things that are pushing these prices are international. Yeah, we've obviously, North America, the US, we've done some things to ourselves to kind of help push that price even a little bit higher. But most of the reason for this stuff, it's international. You start looking around the world, and it's things like Chinese urea exports have been extremely low. Chinese phosphates, very, very low with a limited number of options. India, one of the biggest world's buyers of fertilizer, just continues to play catch up and buy massive amounts of tons. And so just globally speaking, as the world price goes up, we have to go up with it. And people will sit there and say, no, that's not the case. We don't have to do it. Yes, it does. If we get too cheap, exports start picking up drastically, and all of a sudden we're looking around saying, where's our product? We don't have anything. So yeah, you can go across the board of all the different fertilizers. At this point, we're early September. There's not a lot of time before application for this fall. And people might say, that's not right, Josh. That's a month and a half. I've got 2 months. That's a long time. It is. But when you think logistically, especially from a global standpoint, we're out of time. Right now, if we wanted to buy another vessel, let's just say phosphate from Saudi Arabia, for example, and we had the boat there, the product at the port ready to go, everything was perfect, that boat doesn't show up for a month, and that product doesn't hit most of the Midwest areas and for another month. That's basically a 2020, that is basically a December arrival product by the time it gets here. And for a lot of people, that can be too late.
Absolutely. And I think that you made a critical point. We import so much on the fertilizer side of things into the United States instead of domestic production. And so that is a critical factor. I think you have some slides here that we want to take a look at in terms of the imports coming into the United States.
So yeah, this is looking at U.S. urea imports over the years, right? And bear in mind, a fertilizer year starts in July and it ends in June. So that's what we're looking at here, just so everybody's on the same page. But you start to look at this. These are not small numbers, right? And we're talking 5.5 million tons being imported into the U.S. to meet our demand. And this is on top of the production that we already have in place. So here's some of the things that start to get scary. And people are like, why all the volatility? Why all the craziness out there? Well, look at what happened with the Middle East. If you think about it, if you go look at the map, 1 out of every 2 tons of urea that's exported in the world comes from North Africa, Middle East region. You've got a lot of tons coming from Algeria, Qatar, Saudi Arabia. So that's a big risk. One of the things that people are trying to stay hush-hush about is the fact that we're getting a lot of our stuff from Russia. Russia's our single biggest supplier of urea from the outside. So why is the market so cagey? Why is it so nervous? President Trump's been threatening the heck out of them. If they don't find peace with Ukraine, he's going to tariff them. If that happens, we've just lost a third of our import flow. So we talk about these things that we, we're chatting about, we try to share with the marketplace, and a lot of people sit there and try and say, oh, it doesn't matter. It's fear mongering, it's this and that. No, it's not. These are very real things. It's just it's a lack of education. So this is looking at UAN, and this is where I get a lot more worried. Now, we just went through a spring season where much of April and May, large swaths of area, farmers, retailers could not find supply. This was not a pricing mechanism. The nightmare scenario could not find supply. Now, fortunately, we got to the spring, everybody survived, but it kind of opened up everybody's eyes like, oh, wow, we always talked about that, but that finally happened. This fertilizer year, July 1, 2025, started worse than any year I can think of. And I've been in the industry now for, it's almost a quarter century, 23 years.
That's a bold statement when you say it's the worst that you can remember. I mean, that really hits home in terms of how dire this situation could be. And it, like you said, it could get worse.
Yeah, absolutely. Yeah. So look at this year. We're in fertilizer year 26 now. Our starting inventories are incredibly low because we didn't have anything in spring. We wiped everything out. Our export flows could actually be bigger. Europe is continuing to suffer with their own production rates, which means they're coming here. In fact, we got our July data. Massive number of exports. We were actually a net exporter of, I think it was 40,000 ton in the month of July. I can't remember a time I've ever seen that. Our imports could be slashed by half. I mean, take a look at this graph. Half of our imports come from Russia. If Trump wakes up one morning in a bad mood and says, heck with it, I'm tariffing Russia, we just lost half of that 2.2 million ton that we had last year. Demand we still expect to be very good. I think the price will try to kill some of that demand, push it to other nitrogen products. And then we've got some of our own production issues here at home. Nitrogen production, it's a very high temperature, it's a very high pressure system. It wears the machinery out. And either you plan for downtime and you have the people in place and you have the equipment in place, and it is a controlled shutdown and restart, or you can roll the dice. Maybe the plant lasts a little bit longer, but if it breaks, you're not going to have the people, you're not going to have the parts, and that downtime lasts even longer. So we got a lot of production downtime coming. So all of this together, this is a significantly worse situation that we have ever seen. Now, again, there are routes forward where things get better. You know, Russia-Ukraine peace could certainly happen. Trinidad production could start to pick up and get back to normal. Maybe the Russia-Ukraine peace would turn into gas flowing back to Europe and restarting the rest of their offline production. There are always things that can change the market. We never sit there and work and say guarantees, but right now, a lot more roads lead to higher prices than they do lower right now. And looking at potash, this is one that's interesting. Fortunately, potash is one of the good ones. Potash, it's not great, but it is at least connected. It is at least decent when we look at it price versus grain values out there. And as it should be, it's a very well supplied product globally. And look at where this comes from. Canada is easily the number one exporter in the world, and we have them just to the north. We share the border with them. So that is great. Obviously, we get a chunk of our tons. About 10% of our inflow comes from Russia, but I think we could probably offset that with a little bit more from Israel, a little bit more from Canada. So fortunately, potash is one that looks pretty decent right now. We continue to see that being a well-supplied market. I don't want to say we're getting quite to the oversupply market. Some of the expansions and new production that we've been expecting is getting delayed a little bit. But again, some of the things they're saying is we don't want to rush it because we see a lot of product out there.
One of the hurdles that has been common theme here as you've talked through this is the import side and obviously the trade policy, the Trump administration trade policy. And we've got quite a bit of tariffs out there on global trading partners right now, and that impacts it. And I think that this chart probably speaks to that really well. If you want to talk us through what we're looking at here and how this impacts prices and supplies and all that.
So this graph showing, the top 8 phosphate exporters, and you're going to sell really, really quickly. There's only 5 that really matter. And your top 5 global exporters in the world account for about 85-90% of production and exports. So nitrogen, you're talking about a product that's produced all around the world. Phosphate, you get to narrow in on a few countries. And even this is a little bit skewed. This has China as the second biggest exporter, about 6.6 million ton. That's not right, historically speaking. Normally, they're exporting between 8 and 10 million ton per year. And this is 24, which is actually a good year for them. Here in 25, we don't expect their exports to be much more than about 4.5 million ton. So if all of a sudden we're talking about taking China from an 8 to 10 down to 4, look at this list. Where are you going to pick up an extra 4 or 5 million tons of production? It doesn't exist around the world. So this is a big reason. But the lack of Chinese export is a big reason why world prices are as high as they are. We are operating what I think is about a $75 to $100 ton premium over the world of where we should be because of these tariffs and because of these duties. Now, it's important to note, this is not just the Trump administration. This was not just the Biden administration. This is a little bit of both parties. So I know some people online on Twitter, on X, have been sitting there trying to say, oh, this is, Trump's fault. This. Everybody's hands are dirty on this one. So if we go down the list, and I'll start with China because they're historically the biggest one out there, tariffs got put on them during the first Trump administration. We used to see a lot of product come from China. We just haven't since that point. It just doesn't make any sense. Number two is Morocco. We put countervailing duty on those guys early 2021 and made it almost impossible for them to bring product here. And now there's also tariffs on top of that. Number three is Saudi Arabia. Trump, obviously, this big economic war that he's waging, they put tariffs on there, and Saudi Arabia has found a better home going to India. And then Russia has got duties, again, the same thing as Morocco, early 21 during the Biden administration. And tariffs are something we need to worry about. Every single morning we're waking up and watching, is this the day when Trump is going to step up and say, we're done with Russia, we're going to shut everything down? So that's your top four. And we have a lot of our own production. We have great production here, but it's been suffering. Q4, Q1 was the lowest phosphate operating rate I think that we've ever seen on record. Q1, it only jumped about 3%. And we don't expect a whole lot of building as we start to get into Q3. So unfortunately, we've blocked four of the biggest countries from coming here directly, and our own production's suffering. And this is why we continue to sit there and say the reason prices are high is because it's trying to rebalance the S&D. It is trying to kill demand to rebalance the S&D because it can't fix supply. It just can't. So it's trying to kill demand to rebalance that. And therein lies the question. Have we killed enough? And I don't think we're going to know that answer until about Christmas.
We've talked about, obviously, the supply side and tariffs and impacts there and everything. There's one other factor that just recently popped up, and it probably shouldn't be a surprise because it's been a factor for the past several years at harvest time, and that's low water levels on the Mississippi. Mm-hmm. And so that means that your time's getting it from New Orleans upstream up into the central corn belt where the supply is needed is going to take longer. There's tow restrictions, and the result that's just going to be a lower supply coming upstream. And so talk a little bit about that if you could. And it doesn't look like that situation is going to improve anytime soon. We look over the short term to moderate term forecasts, and there just isn't a lot of rainfall for that lower Mississippi River area.
And you're absolutely right. When you think about it, we're talking about these low water levels, and it does. You can get to the point where you can only run daylight hours. Well, that can kill an entire night's worth of sailing. You might have to restrict the number of barges that can be on a tow. You might restrict the number of tons on a barge. And if you sit there and look at a single one, it's not that big a deal. But when you think about the number of boats that are constantly going up and down the water flow, those little reductions turn into really big numbers at the end of the day. And so the one good thing about it, and this is kind of a depressing good point, is that we've gotten really good at this. The market is kind of used to high water, low water. Normal is the only thing that doesn't make sense anymore. It's almost like we're living in an age where you're either high or low. There's some sort of a restriction in place, but we've gotten used to that. But yeah, you think about it, again, we go back to the farmer financing, the farm economics. It's very, very poor. Does that mean the demand has gone away? No, but it does make everybody want to wait until the absolute last minute. But there's no reason not to look at that. And so if all of a sudden the farmer's saying, I'm waiting till the last minute, well, now the retailer says, I want to do the same thing. And the distributor says, I want to do the same thing. So you're backlogging all this demand. And then all of a sudden the day that everybody wakes up and says, okay, I want product, and we find out, oh, sorry, barges can only take so much product because the water levels are low. Now you've just taken a bad situation by itself. That's a very hard situation. It made it that much worse.
Absolutely. We don't need situations to be worse. So be proactive here. Don't wait. Procrastination is probably going to cause more pain than it definitely won't do you any good. Finally, Josh, I find these absolutely interesting. We're talking about some ratios here on the different fertilizers. And so talk us through these charts. Full disclosure here, I'm colorblind, and so a chart like this just absolutely spins my head. Talk us through this spaghetti chart of lines you got here, because there is a lot of data on there and a lot of important data.
Yep. And so when I look at farm marketing, and I always try to preface this with, I don't own your farm. You have gotten to where you are because of your family to help build it to where you are from the work that you put into it. You've become very successful without me existing. So don't think that I'm coming in here and saying, I think you need to change everything you do. But I think this is an important way to maybe massage the way we look at it. And I look at farm marketing kind of like just manufacturing. I don't want to get in the weeds and try and call the low of the fertilizer markets and the high of the grain markets. I'm not smarter than the market. I know I'm not smarter than the market, but I know when there's good value. And so when I look at farm marketing, I'm basically sitting there saying, how many bushels of output am I, spending to pay for that input? So in this graph, how many bushels of corn am I paying for that 1 ton of urea? And I've gone to, I can't tell you how many times I've given a presentation and shown these graphs. And I've asked the audience, look at this chart. Would you rather spend 115 bushels of corn or 55 bushels of corn? And of course, everybody thinks it's a trick question, right? They're always like, "Oh, it's a gotcha question." Like, it's not a gotcha question. Would you rather spend less or more? And I'm like, well, I'd rather spend less. Like, so you don't care where the prices of either one are. Yes, we want corn to be $20 a bushel, but at the end of the day, it's that relationship between the two. And so the reason I've got the spaghetti chart, the reason I go all the way back to 2005 is to show how poor the value is today, how high that value is today. That dark red line right there in the middle that ends with the dotted line, that's to show how high it is. We are significantly higher than what we would consider that normal range. The farmer out there is spending far more bushels to pay for their urea input. And this is across the board on all these different graphs that we have out here on the major products. This is really what it comes down to. This is what folks are really suffering with. This is why the farmer, whether they can talk about it in these terms, whether they just talk about it, the prices are too darn high, which is absolutely right statement, this is what they're eventually getting to. I'm having to spend a lot more bushels, and I'm really struggling to have enough bushels to pay for everything. So, yeah, UAN, it is the third highest ratio that we've seen for the data that we have for UAN. It's horrible. And this is one Western Corn Belt anhydrous. And again, we talked about this before. Eastern Corn Belt is primarily spring, so we don't look at it too much right now just because the programs we have in place today will change by the time we get to basically the end of the year when the programs start coming out for spring. But this is where I think anhydrous this fall could be a very, very big run. I'm not saying anhydrous is cheap. There's nothing cheap about it. But when I look at anhydrous versus urea, it's well priced. When I look at it versus UAN, it's very well priced. When I look at the ratio, it's at least connected to what I would consider that normal band there. So it's trying to buy some demand away, but this does worry me a little bit because not only do you have this really good value, well, decent value, we also have a situation where farmers are going to try and save every single penny they can possibly save. And hydrous is that route for people that have toolbars, have the equipment to do it. So we're kind of watching and saying this could be a really, really big fall run if harvest goes well, if the farmers have the money, and frankly speaking, if Mother Nature allows it.
Absolutely. We've seen that in years past where you get a good fall and harvest goes quickly and the anhydrous just goes on really rapidly. Mm-hmm. And then we've seen the years where it's just a slog through harvest time frame. Yep. And it really slows things down and it reduces your applications, which then causes issues as you go other situations, as you go through the winter time frame and then into spring and with demand and pricing and all that stuff. So moving target, so to speak, because of Mother Nature.
Yep, it's every time I talk about anhydrous, anytime I do a report, you always end it the exact same way. Mother Nature pending.
Absolutely.
Looking here, this is to really show just how bad a shape phosphate is in. And you see that peak, that gray line right there. That is 2008. That represents, I think it was 183.43 bushels of corn to pay for a ton of DAP. These are weekly averages. So this isn't looking at all the spot deals out there. This is just looking at the week and saying, okay, the price is around here for the week. This is the corn price at the end of Thursday. Let's use it. But if we use our spot values versus that all-time high, we actually beat that. A few weeks ago, we hit 185.5. So we can literally say we have seen the worst values, the worst phosphate corn ratios we've ever seen. And again, a large part of this is because of that lack of supply. It's the inability to find imports. It's the lack of Chinese exports. It's our own production shortfalls. And that's a phosphate market saying my S&D is completely jacked up. I know I can't fix supply right now. There's nothing in my power to fix the supply. I need to actively kill demand, and that's what it's trying to do. That's why this number, and this is, again, why I show the spaghetti plate of lines, not just, last few years. This is to really show it's not very often we spend up here. And then looking at potash, like anhydrous, potash is decently priced. We're not going to say it's low. It's not low. I'd love to see something like those bottom lines down there around like the 50, 55 number. But again, at least potash is around where it's at. And that makes sense because potash is decently supplied. It's not a struggle to find it. There's some question of how good or bad potash will be because of the high price of phosphate. Let's face it, a lot of guys will look at phosphate, potash together as a package. But potash is trying to do some of the work. Potash is saying, listen, I am where I need to be valued. I'm on the higher end, which makes sense given the current situation. But is that enough to offset the phosphate price? And I don't think it is today. That's what worries me for potash.
Absolutely intriguing, Josh. Is there any words that you want to leave? I think I kind of know where you're going to go with this one, but leave farmers with it as we conclude this one. Not only moving through the fall season here, but then on to winter time frame and into spring. Any words of wisdom there?
I'd say I've got two I try to leave people with. Number one, have the conversation with your retailer, your co-op, your supplier, whoever that is. And notice I did not say go buy it right now. Just go with a check, throw it across the table and say fill in whatever it needs to be. Just go buy it. I didn't say that. But having the conversation about here's kind of what I'm expecting to do, what I think I'm going to plant, what I think I'm going to need, gives your supplier that much more information to know how to prepare themselves. Because if we're not talking to them and not saying anything, they're dealing with the same risk you are. They don't want to put the tons in either, and they're going to take a just-in-time demand approach as well. So the more information we can chat back and forth, that'll help ease some of the pain of this. Number two, when we're looking at this thing, we're looking at farm marketing. Remove emotion from the equation, especially with that phosphate ratio chart. People look at that and just say, I'm not going to put it on. I refuse to put it on. They're angry. They're mad. They're upset, which are all correct. We should be. This is horrible. I can't think of a time that's been harder than what we are today. But when it comes time to pull the trigger, we've got to remove that emotion and say, okay, what is the best route forward? One of my biggest worries right now is that we'll see farmers as a whole say, I'm not putting on phosphate. I'm just not going to do it. And maybe even that's enough to make the price fall as we go into wintertime. They say, aha, I told you, I got you. Well, now all of a sudden, if we return for spring, can we get a whole fall and spring season done in the springtime? I think we're going to struggle. And number two, if we don't get that reapplied, what does that do for next year's crop potential? What if all of a sudden we sit there and say, I'm just going to use random numbers. Let's say we skip our phosphate rate and we save $10 per acre and we feel really good about them ourselves, but all of a sudden we get to next fall, we figure out our soil levels are a little bit deficient and we just cost ourselves $5-10 worth of yield potential. Well, that far outweighs what we saved on the front end. And we just made a bad situation worse, again, because we made that decision, because we were angry, upset, nervous, all these things. So clear heads. I can tell you I've made plenty of stupid, angry decisions in my life. If my wife was on here, she'd be more than happy to tell you my stupid decision while I was mad and how not a single one of them have ever worked out. But that's my biggest thing. It's very easy to be emotional in this stuff. You should be. It's your operation. It's your legacy. It's your operation. You should be. But we got to look at this thing like CEO, and a CEO does not come into a lot of decision making upset.
Very good point. So get out there, talk to your supplier, and have those conversations. And number two, take the emotions out as much as you can and look at it from an analytical standpoint like a CEO would do, because you're the CEO of your farming operation, like Josh so adequately and importantly stated right there. Josh Linville, very much appreciate you being with us today. Absolutely wonderful synopsis there of the fertilizer situation, what we're looking at as we move forward, not only through fall, but then into the winter and spring time frames. And a lot can change in this marketplace, but you've done a terrific job of just running us through everything that the farmer needs to know in making these decisions. Once again, Josh, thank you so much for joining us here on the Comstock channel. If you like today's content, please make sure you like and subscribe to our channel. For the Comstock channel, I'm Senior Analyst Brian Grete.
Futures trading involves risk. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.